Hi, it's Jacob here from Ripehouse. Now, yesterday I sent an email out to our audience, and in this email I detailed the numbers of a deal that Anna and I actually recently purchased. So this is a personal purchase. The numbers in it were quite strong. Okay, it was a very good deal, and we had some responses coming back saying, "Hey, well done," and this is an excellent and love to see it. Well done. But then right on the other end of the spectrum, we had some, very I guess, negative and extremely concerning responses, as if in kind words, in not so kind words, which they were, in reality, very offensive and not really okay. Um, you know, I guess it was a polarizing email. Let me put it that way. And from that, I wanted to really jump in as quickly as I could and film a video to detail the numbers of what were achieved, and then also unpack the strategy, how we were able to achieve it. If we can take away from this some learnings to apply it into your own portfolio, your own investing, then I'll be happy. Okay, so take some notes. Hopefully, it's going to be of value. These are the numbers here at a very high level. So just over a $2 million purchase. So obviously a high barrier to entry, not for everybody. We ended up purchasing this, and I've had a senior valuer on staff here. So Sam works with us full-time senior valuer, has looked at this property for me and said it's about 15% under market value on purchase. We negotiated an 11-month settlement. Okay, so we get to buy it now and we pay for that in 11 months' time, and all the growth over that time is actually ours, and we pay the price now. Got about a $650,000 reno on this property. All right, so I've got to pay cash for that essentially. It's going to add about $750,000 in value to the property, and I'll show you how I work that out in a moment. 13% or just over that net cash flow. All right, extremely high cash flow. This is in the bluest of blue chip growth locations, long-term strong growth characteristics. It is a very active investment, so it doesn't suit everybody. Let me move right into the deal. So this is the actual property, okay? This is the address. This is the listing down here. We purchased it about 4 weeks ago. Went unconditional in about 3 weeks from memory. Okay, this is only relevant to those investors at the end of a wealth planning process. So those familiar with how we operate, we do spend the time to do a formal wealth planning process with all investors. This helps us to understand where we're at now, where we want to get to, and the optimum path to get there. So this is a type of property that creates a legacy. It is used at the end of a portfolio accumulation stage to leverage and create income to set ourselves up for the future and future generations. On purchase, this particular property is $325,000 under market value. Okay, so these very valid comparables. Check them out for yourself. I'd love to see them in comments down below. Sam has come back as a registered senior valuer, very experienced in the industry, at about $2.4 million as his line in the sand, his appraised value. All right, we paid 2.075. All right, so we need a foundation in our portfolios first. We need to take the equity out of that, the strong cash flow, and use that equity to purchase these types of legacy acquisitions. This is a personal example from a few weeks ago. Let's jump forward, the upside. So where we are now, where do we want to get to? Okay, so this is an example of a property that's on the market as of now. It hasn't been on the market very long, and I don't think it's going to stick around very long, but it shows you an example of what this property could move to. So you can see the interior, it's already a going concern. So 4 apartments rented out. Sam has sort of mentioned that this is overall an inferior product. I mean, look from the street outside, it's just a concrete block. Interior, the rooms present very well. Where the upside of this deal is, and I've been looking at this for the last 12 to 18 months, through COVID, so 12 months, sorry. Change of use creates opportunity. So hotels that are not going so well, purchasing those, high vacancy rates, etc., purchasing those and turning them back into apartments, strata tightening them and selling them off, margin. Or the other direction, something that could potentially be turned into a hotel, like the purchase that we made, where it used to be Australia's oldest hotel. So check this out. It used to actually be Australia's oldest hotel, 1837, Barton Cottage. It's already been used as a hotel in the past. Where would they be turning it back into a hotel? So we know all the due diligence that can happen. It's a simple process to turn it back into a going concern. No, hoteliers. It wasn't being considered as a hotel when it was being considered for purchase. So we weren't competing against business people. We were competing against mums and dads looking at buying it as a family home. Okay. I guess there's a little bit of blood in the water in the hotel industry. So hotel people weren't wanting to take on an asset. We looked at it differently. Okay, it could be turned back into a hotel. The line in the sand now is as a family home. The change of use in the future, at the back end of the coronavirus or the pandemic, etc., we've now got high vacancies, etc. We can then look at the margin in the conversion back to a hotel to look for our upside. This particular property is a going concern as of today is on the market for $3.5 million. I've already costed up the reno. We've had building quotes, etc. already about $650,000. We're looking at spending on the property to turn it into the absolute top tier. And then from this as a comparable, once this sells, it's a rock solid comparable. We're going off it anyway in the short term. Once this sells, we're saying that our property is moved up to 3.5 and or even a little bit more. We see and we know our margin. Okay, so look for target comparables for the current property and the standard that you're wanting to renovate it to. Cost up your renovations. Look for opportunities around changes of uses, etc. Some creative type elements that create margin, and know your costs, know the upside. It's incredibly important. So in this case, about a 650,000 reno. From that, the additional 750K of equity if this one sells. Hopefully that makes sense. Now, this is not in a regional centre. It's not a fly-by-night area. This is an extremely scarce location in Hobart. About $1.5 million suburb median in price. Think of it in Melbourne terms as South Yarra. Think of it in Sydney terms as the Rocks, maybe sort of parts of Darlinghurst, even into Wallara, those types of places. Okay, very old. This property was built in 1837. It gives you some idea. Extremely scarce area. There's 4,500 residents. It's landlocked with the water and a main road. Okay, there's very low density. Heritage has a big play around the street appeal. It's not changing anytime soon. We've locked in 11 months of a high growth area, exposure to a high growth area in our settlement terms. For me, in the negotiation, it was about learning about the vendor, what their motives were for sale, looking at creating a win-win scenario. So the way that I structured it, it was a win for them to actually get a longer settlement period. That means that I don't need to worry about buying it for 11 months after we negotiated and went unconditional. We've got 11 months worth of high growth for nothing. We're not paying interest repayments in whatever way until we move on the property. Now, in the first year after that, we're looking at an exposure at average capital growth of about $150,000 in growth on the asset price that's in our pockets and not the current owners of the property. And that's the beauty of a longer settlement, high growth property. It's set to perform long into the future. That's the idea of a scarce resource, something that's they don't make every day. Now, this property, it's not just a high growth asset purchased well below under market value with very strong value add upside. It also has tremendous cash flow. So comparable properties, the particular property that's on the market for sale, the rooms range between 285 and 345 a night. Okay, if you just put a peg in the sand, the average nightly rate in that hotel is just over $300. One of my friends I spoke to is a local hotel operator in the area, a little bit of a larger hotel. He's running at 85% occupancy as of today. He said he's got about a 10% knockoff from pre-COVID, but it's all coming back quite strongly. We've looked at previous examples, etc., and we've assumed a 65% annual occupancy rate. Buy low, we're buying low now. Okay, that's shaked out all the hotel operators, the people interested in this property for the conversion. It's shaked them all out of the market. Who's bled the longest? Essentially, we're coming in here and positioning ourselves for the long term. We would be hiring an on-site manager. So if we earn X, we need to take away Y. So we'd have a higher running cost, we'd have an on-site manager. After that, on-site manager, etc., it's $365,000 a year gross projected cash flow. It's been running as a hotel. It was Australia's oldest running hotel. There's a lot of precedence for what it vacancy and how it rented previously. After paying for the on-site manager and all costs, every single cost, it's a 13.3% rental yield. Okay, extremely high. That's a rental yield after costs. Okay, not assuming the mortgage or those costs which are individual to the user, individual to the buyer. These are the numbers. If you want to dig into that, pause the screen, go into it in more detail. But probably the main one going down here, flowing down here, is the ROI. Okay, so we look at the cash required. When I look at ROI for these types of projects, by the way, guys, I look at projected equity after 1 year, 993, versus the cash required. And that in this case, it's a $1,178,000, assuming an 80% LVR. Okay, so you got to find a little bit of cash to be able to go into the deal. It's an 84% return on investment. Okay, it's a cash on cash return. If you're looking at just the positive cash flow after every single cost, interest, outgoings, paying the on-site manager, all costs, it's a 12.9% cash on cash return. So that's cash flow on cash flow return. Sorry, cash flow on cash return per annum. Extremely quickly recovering that asset, and that's just on cash without leverage. So these numbers speak for themselves. Obviously on hand to answer any questions on any of this. Now, where does this fit down into your overall progression? So it's not probably the first property that you would buy, it's potentially the last. All right, so you've got to get the ordering right. And this is all about building a base, a bedrock of very solid foundational type properties that have got good yield, good capital growth, and good value add opportunities. Buying 1, 2, 3, 4, 5, letting time do its thing, letting compound growth doing its thing. Dark blue line is equity, waiting for that to hit over the $1 million mark. This is the equity required. You zoom back over your whole portfolio, you pull out your equity, put into a line of credit, use it as a deposit to fund the purchase of this acquisition. This acquisition rockets off your net cash flow. So $3,000 a week net cash flow in your pocket. It rockets it off and hits your passive income goals. I'm not saying you go out and buy a hotel. There's plenty of ways of skinning a fish. Plenty of other types of assets that we can purchase that generate this type of yield. Okay, we can only do this because of the equity created in our bedrock, our acquisition phase of our portfolio. It gives us options. If we go after cash flow too early, we have cash flow, we don't have options to be able to purchase these types of assets. Okay, it's really important. So this is probably relevant if you're into two categories. If you're still accumulating, come and have a chat to us. We can help with purchasing the right types of assets that create that bedrock to be able to launch off into the future and then purchase these types of assets. So if you're still accumulating, get in touch. We're happy to talk you through and start the wealth planning process to look at the types of assets that are going to take you closer to your goals. Or if you feel you're ready to purchase this type of property, I'm happy to have a personal conversation with you. I'm happy to look at your portfolio first and make sure that you are ready, and then have a personal conversation with you about how we might be able to help. So there's two sides to this equation. One is, how do we form the bedrock to get to where we need to get to buy this type of property? And the other one is, if you've got a portfolio, you're looking at making that final move into a retirement or active retirement phase, then have a chat as well. Now, this is all part of a formal wealth planning process that we do here at Ripehouse. I think it's really important to give investors clarity about strategy, where they are now, where they need to get to, and the exact steps, mapping them out, the types of properties and numbers you need to achieve at each stage to get to your goals. It's really important. It takes us about 5 hours. We're qualified property investment advisors who are doing this for you. In mapping this out, it's a 20-page document. We're happy to provide it to you at the moment for no cost. Okay, the way that we will deliver this to you, we'll take you through it in 60 minutes. We're jumping in a session. We've got 6 wealth advisors here in the business. We generate the report with you and then take you through it personally. So if you'd like to jump in and reserve a session to go through and create a wealth plan for yourself and your family and create that legacy and map that path out, jump to ripehouseshift.as.me/wealth. We're on hand for any questions. I'd love to get involved in a conversation about this property, the strategy overall. If you've got any comments, please make them below. If you'd like a wealth plan, you'd like us to talk to you on private message, just comment below legacy, and we'll take that as a cue to get in touch with more information. So, love your work. Hopefully this has been insightful, taking you a deep dive around the numbers. I'd love to hear your feedback, your thoughts. Have a great day.